if a stock is going sideways, that means nobody wants to buy it. Dead money is just sitting there waiting for things to happen. Why buy anything that's dead money when you could actually go out and find a stock that has momentum, that's actually moving up, because people are already starting to buy it. The movement is there. But dead money stocks that are just sitting there, you're just wasting time. Welcome to the OVTLYR Trading Room. This is smart trading made simple. This is where we save time, make money, and start winning with less risk together as a team. And for those of you who don't know me, my name is Christopher Ewell. I've twice been awarded top 100 people in finance. I've been successfully trading since 2009. I'm a partner with OVTLYR, and this is my style of trading using OVTLYR. But before we start, let's get into the lesson of the day. All right, lesson of today is called When to Buy a Stock Exactly. Now, this comes from the channel Financial Education. I have not pre-watched this video. I have no idea what he's going to say. So let's get into it. This could be interesting.
Please tell me, when should I buy a stock?
Oh, by the way, I did turn up the system volume. Randy especially mentioned that the other day. I figured that out. So it should sound better today. If you have an issue, please let me know in the chat. I want to fix that right away.
Good day, subscribers, and welcome in today.
Hold on, my camera's moving. I can see it. This camera is cool because you can do like gestures with your hand, which I just did apparently, and it started moving on me.
On the Financial Education channel, we're going to talk about one of life's great questions. When should you buy a stock? When is the right time? Like, does it hit this number? Does it hit that number? So many people with so many different opinions on when you should actually start buying a stock. So that's what we're going to discuss today, guys. I'm going to tell you exactly how I decide on when I should buy a stock. And I say, okay, it's time for me to start buying the stock, right? Because I got like, hundreds of stocks I track all the time, but I buy very few of them. So I'm going to tell you guys kind of like exactly what I do. So there's so much debate about this. All right. Some people think like, okay.
When was this published? Oh, 2018. Wow. I was very curious on when it was published because I didn't know if this was going to be during the meme stock phase. But I mean, it was during the weed stock phase. Let's see what he says.
Okay, the stock's going this way and then it goes up. And okay, now it's time to buy. We got to buy. This one's moving up. So it's got the momentum, it's got investors buying in, maybe it's got big money coming into it. We're going to ride this trend and it's just going to keep going up, okay? And that's some people's belief that, okay, this stock's moving up, this is a good thing. I want to buy, shares, or if I, I've already bought some here, I want to buy some more and things like that. It's going to continue to go up. It's going to continue to have the momentum. Well, as we know, that's not always the case. Maybe it goes up some more, but a lot of times, something happens, bad earnings, or maybe the stock just got too ahead of itself and then it goes down in a massive way, okay? We've seen that time and time again with stocks, that are hot, that have the momentum, and then they don't have the momentum as soon as they report some bad numbers, or an analyst puts a sell on it or something like that, and then the stock gets killed, right? But that's kind of the first one, and so that doesn't really work, okay? That doesn't really work. Just buy the winners. Buy the winner. It doesn't work that way.
Okay, I can get behind that, right? The buying the breakout strategy oh, daggum, I did it again. Sorry, my camera's moving on me again. The buy the breakout strategy years ago was like the thing, right? The William O'Neill's, the how to make money in stocks, all of that stuff. It was very much if something breaks out of a range, now's your time to buy. You can write it off into the sunset. We know that isn't always true, especially in today's markets, right? How often do you see something that pops up and then just goes forever? You don't, right? So I can get behind that. What he's saying so far.
I wish it was that easy. If it was that easy, man, we'd all have so much money. It'd be disgusting, guys. If it was that easy as far as like, oh, this stock's going up, let's just buy it. No. Okay, some people say, a stock like this, it's kind of like flatlining. Okay, now it's time to get in. This baby's ready to make a big upward move. Okay, it's been just steady for a long time. It's just chilling. It's time.
Oh, I disagree. Now I don't know what he's going to say, but if a stock is going sideways, that means nobody wants to buy it, right? Dead money is just sitting there waiting for things to happen. And why buy anything that's dead money when you could actually go out and find a stock that has momentum, that's actually moving up, because people are already starting to buy it, right? The movement is there. But dead money stocks that are just sitting there, you're just wasting time.
It's time to buy in the stock, and it's going to go up. It's going to go up now. This is the time. It's going to go up. Okay, this doesn't really work either.
Yeah, and that would be the point in this case, right? You wait for that dead money to conclude, and then when it starts moving, that's when it's a great time to go. By the way, good to see you, Michael. Hey, Tug, glad y'all made it.
either, guys. Okay, it's been flatlining for a while. Who knows why? It could have been because, you know, it hasn't had much going on with the company. Then maybe they're just meeting numbers. Maybe, you know, who knows why it's flatlining like that. Very rarely stocks do that. But just because it's flatlining, once again, it doesn't mean it's going to go up, okay? Could as easily go up or down. Depends on where the business is going, right? So that doesn't really work either. That whole philosophy of going that route. Some people say, well, you know, if it's you know, like this and then it goes down, okay, now's the time to buy. Now the time to buy. It went down a bunch. It's due, man. It's due to pop back up. It's due to pop back up, man. We're gonna make a lot of money on this. It's gonna come back to here or somewhere close to there, and we're gonna make a fortune on this, right?
Right. This is not like buying. This is not like going to the store and buying like a jacket on sale and knowing that you can go out on eBay and find somebody else to buy it higher, right? This is the marketplace right here. If the marketplace has dictated the price to go down and you decide, oh, I'm going to capture all of these shares, that should tell you the marketplace is not anticipating to pay more for it. So if you've captured these shares with the intention to sell it later, the marketplace has already spoken, right? It's like going to the jacket store when it's on sale, buying it at 70% off, and then trying to turn around and sell it back to the jacket store the next day. They're like, bro, like, you're lucky if you can even get a refund on this, okay? Like, nobody's buying these jackets. You don't need to be buying this stock, right? Same concept here.
Buy low, sell high. That doesn't always work either, guys. That does not always work either, okay? Just because a stock's gone down a bunch doesn't mean it doesn't deserve to go down more in the future. It's going to depend on where that business is going, right? Where that business goes over time is what's going to dictate where that stock price goes over the long term. So just saying, okay, the stock's going down, we're going to make a lot of money because it's going to go back up. Doesn't work that way. This company, who knows? Maybe they go bankrupt or maybe they stay down there, okay? There's been a ton of stocks that, you know, fall to that, you know, $10 range or $8 range or $5 range or $3 range, and they stay there for a long time or until bankruptcy, all right? So just because the stock goes down a bunch, once again, doesn't mean that's necessarily a buying opportunity, all right? So how I think about it, and you know, as far as me buying stocks, I like to think about a few different things. The first one is I like to think about, you know, am I going to always, do I understand that I will never always make money in a stock 100% of the time? Yes, okay? Something we always got to understand, like you'll never make money 100% of the time. It's always going to be a few stocks here and there that just don't work out for whatever reason. The business went wrong, management made screws, who knows? You know, you can always lose money. Like it doesn't matter. Warren Buffett, the greatest investor, you know, that we all look up to, right? At least as value investors, anybody you look at, they've all lost money on stocks before, okay? The trick is you got to make money a lot more times than you lose money over the long term. So the first thing I like to think about is I like to think about, you know, 5 years out, okay? The 5-year plan, I call it, the 5-year plan. So when I think about this business, 5 years from now, can I really see this stock being at the same value or less of a value than I am buying at today?
I don't think that matters whatsoever. Now, he just mentioned that he's a value investor. I am an active trader. Very different ballparks here. But I don't care what's going to happen in 5 years. I do not care what's going to happen in 5 years. I don't know what's going to happen in 5 weeks. Right. And to think that I, a regular retail investor, know what's going to happen 5 years from now is completely idiotic. But I don't care what happens in 5 years. All I care about is the stock moving today? I care more about what happens in 5 days. Right. Is the stock moving? Is the price moving? Is it going in the direction that I want to see? And if it goes over that direction over 5 days, I'm probably making some pretty good money at this point. I don't need 5 years.
And the answer always needs to be absolutely no, okay? Absolutely not. Like, there's no way possible I could see this business being valued the same it is today or less than what I am buying at these shares now, 5 years from now, right? That's the first thing I like to think about. You know, that really kind of gets me thinking about the business overall, where the business trends are going, where I see the business trends going, where that industry is.
Okay, so he clearly is a lot more fundamental than I am, but that's okay. Everybody has their own style.
Going, everything like that. It's called the 5-year plan, guys. All right, 5-year plan. If you see that business, you know, going down or even having a chance to go down realistically in 5 years, it probably means it's not time to buy. It's got to be like a no-brainer. Like,
I can't tell you how many stocks I bought into when I didn't even know what the business was, right? In fact, I had this conversation with a market wizard, Tom Basso, and I said, Tom, I recently just bought this stock, you know, in a company that I've never even heard of. He's like, nah, I do that all the time. I was like, what do you mean? He's like, I don't need to know anything about the company. All I need to know is the stock price. Is the stock price going up? Yeah. Okay. Good enough for me. That's the attitude I take.
I'm going to make money in this, okay? Second thing I like to think about is if I couldn't sell. So if I can't sell, let's just put it that way. I can't sell. So if I can't sell these.
If you can't sell, you shouldn't buy. Okay, liquidity is paramount. If I'm buying something, if I am buying a financial instrument and you tell me that I can't get out of this financial instrument, I have just basically bought a paperweight, right? I've taken my money out in the shed and set the whole shed on fire. I don't want that. Do you, Jorn? Good to see you.
These shares for, let's say, the next 5 years. Will that determine, me losing money in that stock? Would I feel comfortable basically being in that stock for 5 year span? I can't sell those shares. Let's just imagine like the stock market closed or something.
Dude, there is no company that I would say, I want to buy this and never touch it in 5 years. The market, yes. The market itself, yes. Individual companies, no. Because even a great company like Microsoft, Amazon, Tesla, name it, right? NVIDIA, there's nothing to say that 5 years from today that they can't be completely upended, right? Those companies uprooted other industries. And if you give somebody else 5 years, somebody else could come in and uproot that. So there is no way that I would pick any one particular company to hold blindly for 5 years. However, I would own the market. I would own a market index because historically speaking, that's gone up. Oh, to Brian's point, Berkshire Hathaway, that's a good one. Historically speaking, the market's gone up, over basically any 5 year chunk of time. It's not 100%, but basically any 5 year chunk of time, the market's gone up. So I would go in that route. But individual companies, I think that's way too risky. I mean, we have very different investing styles. I'll just leave it that way.
Or I couldn't log into my account, something crazy, okay? And I literally couldn't sell those shares for 5 years. How would I feel about those shares? Would I feel comfortable with them? Would I feel comfortable with them if I literally couldn't sell those for 5 years? If the answer is no, it's probably not the right business to be in, right? You probably don't.
Unless you're an entrepreneur, like, here at OVTLYR, right? I've got plenty of funds tied up in OVTLYR as a partner. And like, if it takes me 5 years to get it back, that's just part of the game, right? But I have a lot of control over what's going on at OVTLYR, right? The inputs, the outputs, the marketing, the platform itself, right? We, as an entrepreneur, you have so much more control of it. However, buying a stock like Dollar General, right? Dollar General may be out of business in 5 years. Best Buy may be out of business in 5 years. And these may be perfect example of stocks that he wouldn't buy. But let's say that they fit your use case and then they up in 5 years are gone. So yeah.
You don't want to be invested in a business that you feel like, oh man, I really need to trade this next year or next month or next week or 2 years from now. I don't feel comfortable in this business over the next 5 years. If you feel like that going into investing in a particular stock, that's probably not a stock you want to be in, right? Why would you want to be in a stock that you feel like you need to trade all the time or the business might go south big time in a year or two? Like, why would you want to be in that type of stock? You want to be in the type of stock that, over the next 5 years, you've looked at all these things and you see that business expanding. Management sees that business expanding. If you're not in that type of company, well, like, why even buy in the first place? And the last thing I like to think about, which really kind of determines, whether I buy stock or not, is I like to think about the earnings, okay? Or the current earnings and where those earnings, I expect them to go over time, where management expects them to go over time.
You probably know where I'm going here. I don't care. Earnings don't matter. Is the price going up? Really? Is the price going up? At the end of the day, let's boil it down to one question. Is the price going up? All of this that he's talking about right here are justifications to hold it in a situation where he shouldn't hold it, right? He doesn't have to sell himself, or I should rephrase that. He has to sell himself on, hey, if this happens and this happens and this happens, I need to have my long-term plan in place. Whereas you don't have to do that. You can say, if it doesn't work, I'm just going to get out, right? I'll take my small loss that I've calculated ahead of time. And I know it might be 1%, 2%, 3% of my account, but I'm still going to leave with 97% of my account. And I'll be in the next trade 4 years, 3 weeks, and 6 days before he does. Different styles. I know.
The easiest way I like to do this is kind of like the PE ratio, okay? So I talk about forward PE all the time on this channel.
I've never looked at a PE ratio ever.
It's probably one of the most used terms. Like if you add up my videos when I'm talking about particular stocks, I talk about the forward P. What that basically means is over the next 12 months, how much money is that company going to bring in as far as profit goes versus whatever that company's market cap is. There's two different ways you can calculate it. One is net income versus what their market cap is. One is EPS versus their share price. Either way, you're going to get to the same answer. Okay. So what this basically tells me is it tells me how many years would I need to be invested in this stock for me to get my full payback. So let's assume a company has $1 of EPS. Okay. Let's assume this company has $1 of EPS right now, earnings per
Saw my eyes there. How many years I have to be invested in this company to make money on it? Bro, if I'm not making money on it within a week, I'm out.
Share, all right? And let's say those shares are trading at $10, all right? Let's say those shares are trading at $10 share price. So what this means is this company has this $10 share price on it, $1 EPS. We divide those numbers out. You basically get a forward P of 10, assuming that they would just earn that. So just assume you never expect this company to grow or decrease in the future, which would be a very weird instance, okay? If you don't expect this company to grow or their sales to decrease, basically what this means is it's going to take about 10 years for you to get a full payback as far as the profit versus what that company actually cost you, okay? It's going to take 10 years. So if they make $1 of EPS per year, if you're in that stock for 10 years, and that's what they always make, it's going to take 10 years for you basically to get a full payout of your investment. So assuming let's just assume they would pay all that dollar in dividends each year, okay? You would basically make back your full investment, 100% of your investment money back within 10 years, okay? Not only that, but then you still own the underlying shares.
I would much rather double my money and let it take a few weeks buying options, and if I'm wrong, lose some, and that's okay too, then having to wait 10 years to double my money. Oh my gosh.
That's a way I like to look at it. Now, rarely companies stay at making $1 EPS, and rarely they would pay out 100% of their money in dividends. I just think that's a simple way to kind of understand business, because that's kind of the way you always think about it. Like, what's my return? How long would I need to be in this investment to double my money? That's something I always like to think about, right? A lot of the companies I buy, a lot of them have forward Ps of 10 or under. Okay, you look at a lot of the companies I own, but a lot of those companies, as far as when I look out over the next 3 to 5 years, they're going to expand their EPS quite dramatically. Okay, a lot of them probably, in my opinion, will double their EPS probably within the next 3 to 5 years.
Again, super subjective, right? He believes they're going to increase their earnings per share, right? Whereas when I look at a chart, I can say, oh, look, the SPY is breaking the 10 EMA. If I'm following that, I need to move. Yeah, it's the subjectivity of fundamentals that really bothers me, and I don't understand why anybody can do that. But granted, I'm a paint by numbers kind of guy. I'm not an artist, right? And maybe this is his artistry.
Years. So I'm paying a low price, and they should, definitely increase that EPS over time over the next few years, which puts me in a situation where, obviously that company's valuation ends up having to go up and up and up over time. And if it doesn't, then the company can just start paying massive dividends at that time and just pay out the share.
No, the question is when to buy a stock exactly. And as Brian said, he never even says what he's basing his opinions on. Bro, I'm telling you, a lot of people, Brian, base their opinions on gut feel, right? Oh, do I think that this company's going business for 5 years? Well, of course. Do I think that they're going to make more money 5 years from now than they do today? Well, absolutely. I mean, look at NVIDIA. Things are only going to go up from here. It can't possibly have topped now. People think like that, right? And then it's, oh, their earnings per share. Well, it's going to probably triple, maybe quadruple in the next 5 years. I mean, conservatively speaking, double at least. So, of course, this is a great stock to get into.
Shareholders that way, and I can make my money that way, or they can buy back shares, which would make the EPS look even bigger and bigger and bigger as long as they keep bringing in that net income or more of that net income, right? That's how you kind of really want to think about it.
I'm really curious if there's a chart out there that shows earnings per share correlated with stock price. That would be super interesting to look at, because I would bet that it's not the sort of correlation that he's saying here, right? The earnings per share going up leading to a higher stock price. It's not necessarily going to be that.
As far as when you should buy a stock, because like I said, I track hundreds of stocks, and I buy what? How many stocks do I hold in my personal portfolios?
69.
Maybe, I don't know, 7, something like that. But yet I track hundreds and hundreds of them. I just pick a select few. I'm thinking 5-year plan. Where's this company going over the next 5 years? Do I even think there's a remote possibility I don't make money in this one? If there is, then I probably don't.
Is there? Oh, wow. Okay, let's go back for that one.
Company going over the next 5 years do I even think there's a remote possibility I don't make money in this one?
Famous last words. Is there? I should have a famous last words wall. Is there even a possibility I don't make money on this trade? Whoa. When you think like that, you over leverage yourself to a fault. Because why wouldn't you? If there's even a possibility I'm not going to make money on it, then why would I not put everything I own into it? I should mortgage my house and take out additional loans as well. Because if there's even a remote possibility I'm not going to make money on it, then why wouldn't I just buy everything of it? I would buy every single share that is outstanding. Brian says, as P.T. Barnum once said, there's a sucker born every minute. Have you reviewed TrendSpider's go no go indicator? Oh no, I haven't. Is that just up in the indicator list? Go no go trend? Oh, that's interesting. I don't know what that means. It just like changed the colors of my candles. Brian, teach me.
If there is, then I probably don't want to be in it, okay? Also, if I can't sell those shares for 5 years, am I going to lose sleep over that? If I'm going to lose sleep over that over the next 5 years, probably not a stock once again I want to be in.
I'm going to lose all the sleep over that personally.
I want to be in a company that I trust that management team with my money because I'm essentially buying these shares in the company, right? I trust, you know, in the simplest way you can think of, management has that money now, even though they technically really don't. You could say, well, management has that money, control that money because whatever they do in the business over the long term is where those shares are going to, you know, price is going to go. Short term, anything can happen. You know, they could report bad numbers, or analysts could say this, or who knows what. Shares could move up or down bad in the short term. Doesn't matter, okay? But over the next 5 years.
But over the next 5 years, if I realistically think I'm going to lose money on it, I shouldn't trade it. Or I'm only going to take stocks that there's no possible way I'm going to lose on.
It's going to determine where that management team takes the company. And the last thing is the earnings forward PE. Where's that at, man? How long is it going to take me for me to double my money on this position? Things like that, guys. That's how I really like to think about it over time. And you know, once again, long-term investing, it's just the way.
When to buy a stock exactly? When is that? Give me a date.
Go, man. Thinking long term. And when people always want results now, they always want results today. They always want to be able to make money on that very day. And the truth is, nothing in this world is built short term. You look at anything like Amazon. Do you think Amazon was built overnight? No, that company was started in the 90s. Amazon was started in the 90s, and now, you know, over the last few years, it's finally, you know, become the golden child, and everybody talks about Amazon, how great Amazon is, and how big it is. Like, nothing big is built overnight. Okay, Warren Buffett's, you know, huge success. Do you think that was built over?
I can agree with that, but he's also painting the picture. And justification, I can see the justification written all over the wall. Amazon took years to go up in price. So this company that I bought, I'm going to hold it for 5 years anyway. It's going to go up in price too. You can see the writing on the wall. You can see the justification that's going to follow when the price doesn't go your direction, which at the end of the day, it doesn't matter what you think about the stock. What matters is what everybody else thinks about the stock, because they're the ones helping you buy it or selling it against you.
Over a 5-year span or 10-year span or 1-year span or a month span? No. Okay, Warren Buffett, you know, built that over decades upon decades upon decades. Anything great you want to build in this world, it's going to take time to get there. So don't get impatient with it. So many times people want to see results now. I want to make money today. That's not realistic, guys. That's not the way this game works. No.
But holding something that goes down 50% because you feel like the EPS is going to double next year, that's how this game works. Got it.
When I ever know that started business was just a booming success overnight. Okay, that's not the way the world works. So don't get caught up into that short-term mindset of I need to make money every day, every week, every month, or something like that. As far as, you know, especially when you're thinking about investing, it's just not realistic. It's not the way the game works, guys. So I hope you really enjoyed this on, you know, kind of the.
I didn't enjoy it at all because you told me when to buy a stock exactly was the title of this YouTube video. I almost called it a movie. Was the title of this YouTube video. And not only did you not give me any sort of specifics as to when, you didn't give me any sort of criterias as to what to look for to quantify when, but you did tell me lots of excuses to build if you decide to buy a stock and then watch it go down. That's what I saw there. Excuse, excuse, excuse. Because all that matters is the price movement of the stock. And if it doesn't go up, you are wrong. And that's okay. Be okay with being wrong. But don't be okay with being wrong bigly. Be okay with being wrong small. And being right bigly. That's how this game is played. Brian says he sucked you in to his death scroll. Yes, he did. Let's see what Brian's talking about. Let's do that. All right, let's go over here. This is the go, no go indicator that I highlighted on TrendSpider. Dark blue is strong, go long entry. Purple is strong, do not go long. Where are you getting all this? Go, no go. By go, no go charts.com. Go, no go charts.com. Better charts, better decisions, ready to launch. Okay. Go back over here. Yeah, it doesn't like give me indicators to play, like settings to play around with. So aqua go low, go strong. Pink low, do not go strong. Could be helpful along with outlier signals for a stock. Oh, there's the other colors. Okay. I was like, what are you talking about? I just see two. I'll tell you what, Trend Spider is really good. Trend Spider. Go, no, go. Here we go. And Trend Spidering documentation. Okay. Purple, pink, orange, aqua, blue. So as pictured above, the purple color represents the price as a strong no-go. Okay, so that would be a strong no-go right there. All of the secret sauce contained is flashing bearish signals. Not considered a long position. Then change to pink. Potential bottom's been found. Okay. Next color changes to orange, is neutral. All right. Then aqua, which is weak go, and blue is strong go. I'm curious. Now, of course, I am one to always look at additional details, right? Like the order blocks. Like that's something that is just like tremendous. We've proven that over and over and over. So I'm interested in that, Brian. It would be curious to pair this with outlier signals to see how that goes. But in the meantime, turn those off. There we go. Okay, let's get back over to this. Let's get back to our PowerPoint here. So if that was useful to you, share with someone you think that you could use it. And let's jump over to today's member highlight. Oh, looks like I closed the Discord. Let me pop this back open here. All right, basically, not a whole lot's going on. Jorn was saying that he's been using his MacBook for a while with trading, never had an issue. Dave said some cool stuff about the podcast yesterday with Steve Burns, and I mentioned that this is the first of many interviews to come. One thing we are going to be changing up with is continuing to do the trading room, but reaching out to a lot of my friends, other traders that are out there, maybe somebody that you follow, and getting them on, right? Talking about their strategies, what they're doing, what they're seeing in the markets. Like we could make this a lot more of an interview show. And I think that would be great, right? And of course, hopefully it gets more eyeballs on our channel as well. So be sure to share your stories in the Discord and tell everybody you know about OVTLYR. And I know you're already subscribed, but hit the like button for me. Now, back to trading in the OVTLYR Trading Room. What is OVTLYR and how does it work? It's the world's best AI stock trading assistant, allowing you to save time, make money, and start winning with less risk. And it's a 4-step process. OVTLYR monitors how investors are reacting to changing market conditions, news, price movements, and the economy. OVTLYR determines if investors are acting irrationally fearful or greedy, and by how much. OVTLYR gives buy and sell signals when those irrational behaviors reach an extreme, allowing you to get into the stock before the OVTLYR move happens. Now, my style of trading, I call the golden ticket trading strategy, and it always starts with the market. I want to see the 10 over the 20, price over the 50 on the SPY, which we have, but I've been calling this the last few days. I think we're due for a pullback, right? You've got the 10 over the 20, price over the 50. But why have I been calling for a pullback? Because if you go into OVTLYR and you look at the bull list versus the bear list, you can see that the bear list has been growing and growing and growing. We're 50 new stocks with sell signals today versus only 12 new stocks with buy signals. And if we look at today's market breadth, I was a bit surprised it had pulled back just this far already. We're down to 50% of stocks with buy signals. That's it. Half the market has a buy signal. The other half has sell signals, right? So it's not this huge giant trend that everyone thinks it is right now. It's really concentrated in just a handful of places. This stock market map is one of my favorite things to look at. If we look over a week, right, the whole market's red as could be, with the exception of 1, 2, 3, 4, 5 stocks holding it up. Right now, Nvidia's that was holding it up until today, but it's just these handful of stocks that are holding up the market right now. So this is not a market that I'd be interested in getting into. Not in the least. No. In fact, the market is looking like it's going to close under the 10 EMA. And just a handy cheat sheet for you. The 10 EMA, which I got this from Steve. The 10 EMA is the indicator of the short-term trend. If the market closes under the 10 EMA, the short-term trend is actually down at this point. So just putting that out there. So I don't have any reason to put on trades today, right? When I look at this, the market is trending higher, yes, but market breadth is actually giving it the ghost pretty hard. And we've got a sell signal on the SPY. The market trend is bullish and weakening. Market breadth is bearish. We're not even looking at sector breadth right now. So for me, I'm going to hold out and I'm going to continue to wait. Now, granted, things can happen, right? In fact, I believe Wes was in the Discord talking about in the trade setup ideas. Yeah. Looking at going short on XLF. Let's take a look at XLF for Wes real quick. XLF, let me rip off my notes here. XLF just closed under the 20 EMA. It's not under its 50 EMA yet, Wes, and the 1020 hasn't crossed just yet. So for me personally, I wouldn't be ready to go short this, but dude, if you see something, go for it. Let's look at the XLF financials. Financial sector breadth is what I meant to say. Oh, God, that fell off a cliff, didn't it? Look at that. It's almost down to 25%. I mean, it's been rocked. And then if we go to XLF, inside of OVTLYR here, make this bigger. Let it load. Where's that cheat sheet? My cheat sheet. You can't have it. Just a second, Mikey Mike. I'll get it for you. Yeah, we did have that sell signal on XLF and OVTLYR here on December 4th. And since December 4th, it's sold off about 1.2-ish% or so. So, Wes, I would say if you are going to take that trade, just be a little bit careful. The shortness, I guess you could say, the trend, while it is down, is not as strong as I'd want it to see just yet, because you sell the 10 over the 20, price over the 50. All right, Mikey Mike wants himself a cheat sheet. Mikey Mike, I got you. Watch this. Ready? Watch this. Turn your phone sideways and hit the screenshot button. There you go. There. Now you've got it. Now you've got it. But just because I love you, Mikey Mike, I'll drop this in the Discord too. I'll drop this in the Discord. Boom. There we go. All right. So that's going to wrap it for me today. I don't have any trades to put on. We aren't getting into any books at the moment. I'd like to get into The Complete Turtle Trader next, but I don't have that one on Kindle, which means that I'm going to actually have to go in and read it and make notes at the same time, because I can't just read you the book, right? This is not like third grade English class. I can't just sit there and read you books. So I got to go in and I got to do some work too. Mikey Mike got it. Very cool. But I got to tell you, thank you so much for being an outlier. And thank you for being here, right? We want to help you every single day by helping you save time, make money, and start winning with less risk together as a team. Don't forget, we do have a special going on the annual pass up to the end of the year. You can still get it for 45% off to start 2024 off on the right foot. You got to get that. So let us know if you need anything in the Discord. Tell everybody about it. And if you haven't already hit the like button, do me a favor, hit that for me. We're really trying hard to push our YouTube as far as we can. And it would just mean the world to me if you could hit that like button. And I am going to ask you to do it every day, because that makes YouTube work a little bit easier for us. And thank you for coming to the OVTLYR Trading Room today. And you just bought the Turtle Trader. Is really good. Mikey Mike, one thing I like to do is I like to listen to my books while they're being read to me. Like it's Baby Boy Chris's Story Hour. And that one is really good on Audible, like really, really good on Audible. So I would spend the extra 16 bucks on Audible. That way you can do both. And honestly, I know this sounds crazy, but by having it read to you while you read it along with it, you're actually using 2 of your senses and you have greater retention than you would otherwise. Pro tip, something that I'd like to do personally. So y'all have a fantastic afternoon. See you right back here tomorrow. Talk soon.